Let's kick off with the general market at this stage. We're now at 26,360 on the JSE All Share, losing 0.75%. Very mixed signals out there, and it must be difficult for you guys to decide which direction to bet on.
There's definitely a choppy situation in the market at this stage. One can actually see that on the volatility index really picking up off lows and picking up over 27 at this stage. So
is that on the Savvy?
On the volatility index.
The VIX?
Yes, on the VIX. So you're definitely seeing mixed signals out there, and as soon as there's a flurry of buying or a flurry of selling, there's definitely a flow of funds either way, and people can't really decide which way this market wants to go, and there's definitely a cautious stance out there at this stage. Personally, I think the market is still trending up. It's coming off its lows in March. The 26,000 level is quite key for me. It actually dipped just below there on Wednesday, if I'm not mistaken, picked up off there, and the buyers came in obviously on the back of some good data out of America, and the buyers just
You're referring to GDP data, obviously, at 3.5%.
Definitely a strong reaction on that data, and buyers coming into the market and refusing to let this market lie down. So the sentiment out there is still very positive, but definitely a cautious stance going forward.
Isn't it being driven by technical momentum rather than fundamental momentum at this stage? Can the earnings really justify the levels that we're seeing on share prices at the moment?
Well, that's a big debate at the moment. So obviously we're seeing these US earnings coming out of America that are very positive, working off an extremely low base. That low base, I think people don't really understand how low that base that some of these earnings are working off. So going forward, which way are earnings going to go? Are they going to continue to surprise us to the upside, or are they going to remain flat? So fundamentally, there is a bit of a question and an overhang whether these levels that we're seeing in markets globally can actually support the fundamentals. Again, also a lot of technical buying coming into the market, and technical traders refusing to let this market lie down, trading with the trend.
Harmony today, first quarter out from them, and the stock closing down close to 3%, trading a close today at 78.50 Rand. Graham Briggs just a minute ago is saying that they're seeing cost pressures from an electricity perspective, from a wage perspective. They're also having to deal with this incredibly strong rand, which has hurt them. They've swung to a loss in the first quarter. Graham, they're saying that an 8 on the dollar rand level is a suitable level for gold miners. Is this an area for you which is no-go?
I wouldn't say no-go. For me, gold stocks are very erratic stocks. They don't behave often in line with what economic data prevails and what economic sense tells you what should happen to the gold stocks. Obviously, quarter earnings disappointing a little bit. Gold stocks generally coming off today. But, looking at the bigger picture, I tend to like to trade the gold stocks more than anything else. And at these levels, looking at Harmony around 78, it's at the lower end of that range where I'd look to trade the stock possibly back up to 88.40. But, looking at the longer term picture, sort of 6 months and beyond towards 12 months, gold price looks set to move higher. And, the gold stock should follow suit. But like I said, it's not an area that I like to play in 100% and say, well, this is where I want to structure my portfolio. It's more of a trading area of the market that I tend to focus on.
You have been investigating the healthcare sector, the likes of Adcock Ingram, Aspen and Netcare. What are you seeing on that front? Is there value to be had in these stocks?
I definitely think in a market that we're seeing at the moment where we're being stretched to new highs in the short term from our March lows, the healthcare sector offers a nice way to trade this market, where when we do see a sell-off, we saw resources come off over 2% yesterday or on Wednesday, those healthcare stocks tend to hold up quite nicely. So it's a nice way to trade an uncertain market environment, and we've seen Aspen continue to make new highs, and Adcock Ingram also pushing through that 50 level and pushing to short-term highs. Obviously hasn't had a lot of tradability on the market just yet. But,
so you're buying into the defensive nature?
I'm buying into the defensive nature and just taking a bit of a defensive stance. Also, like I said, with the VIX ticking up, there's definitely that element of caution. Unless you're buying significantly weak days like we saw on Wednesday and Thursday and buying into that weakness on your resources, I'm shying away a little bit there and tending to trade rather in the defensive stocks.
You mentioned Aspen and Adcock. What about Netcare? Is that on your radar screen?
Netcare, I was actually looking at that, funny enough, on Monday, It offered a very nice opportunity to get in under 11. Again, was very defensive in an uncertain market through Wednesday and Thursday. And I feel that it's a good stock. I think, I think its all-time high was about 12 Rand that we saw, and that was recently. I think it should start to move to 12 Rand and possibly beyond that. So I'm going to hold that onto that stock, and I think it's a good space to be in.